Good day, everyone. Our topic for discussion today is accounting operations on Bank One. Under this topic, we are going to be discussing two major outlines: introduction to accounting operations and examples of accounting operations on Bank One. Under introduction to accounting operations, we know that accounting operations are a set of pre-configured settings that allows the system perform certain functions without human intervention. They also provide means of designating purposes to ledger accounts such that ledgers not pre-configured under accounting operations are not available for automated transactions. What these settings does is that it prevents human error. Some activities on a system are pre-configured to work automatically. This also helps users who are not familiar with the in-depth knowledge of the application. That is, some operations within the bank or within the organization are already pre-configured on the system. So any user can just go to the system and launch those activities, and the system through the pre-configurations will post or process those transactions. We will quickly run through the various types of accounting operations. Number one, we have the account closing account. Account closing account type of operation is a kind of configuration that allows accounts to be closed in the bank. So once an account is closed with the click of a button, the system will execute the pre-configurations, and that pre-configuration will close the account of the customer and move whatever balance remaining in it into a GL, that is a general ledger, that has been configured to house balances of closed accounts. So this eliminates human error while closing a customer's account. We also have another type of operations here called balance outstanding accounts. What this pre-configuration does is that it houses all balances of customers who are owing the bank. That is, if you have any outstanding balance on loan or on overdraft, this account, that is the GL configured here, is the GL that houses the cumulative balances of all the customers who have outstandings to settle within the bank. We also have another type of operations here called depreciation expense account. This type of operations helps the bank to maintain a monthly depreciation charged on assets. Fixed assets are expected to be depreciated on a monthly basis. That is, the value of the fixed asset depreciates over time. So if the bank buys, let's say, a motor vehicle, there will be an expected lifespan that the bank wants to use the vehicle, let's say 5 years. For every month the bank used that vehicle, the bank is expected to set aside a value, an amount equivalent to let's say 10% or 20% of the value of the asset. So what this does is, as the bank is setting aside this value in this GL called depreciation expense account, it will prevent any human error. Depreciation expense account is a type of operation that allows the bank to pre-configure a general ledger that will continuously house the depreciated value charged on a fixed asset. While another operation is called direct posting GL account. What direct posting GL account type of operation does is that it allows users to have some level of direct access to post into some general ledgers, although this must be regulated by the bank in such that GLs or unauthorized users don't just post into set of GLs configured under this direct posting GL account. We also have fees in suspense account. GLs pre-configured to function as a fee in suspense account houses all balances of customers who are owing the bank some fees or the other. So instead of the fee going to the income account of the bank, because the fees have not yet been realized, the system will automatically move those fees into the fee in suspense account without any human intervention. And when the fees now get realized, the system will also automatically move it out of fee in suspense account into the bank's fee income account. For fees outstanding account, it also work hand in hand with the fee in suspense. So whenever a customer is owing the bank a fee, the system will automatically move such value into the fee outstanding account. This shows that the bank still has some monies to collect from its customers. So once these monies are collected, then the system will automatically debit the customer for that fee and credit this fee outstanding account, and the value will cancel out. We also have another type of operations called general reserve account. General reserve account is just an account that houses the earnings of the bank after operation for a year. So it's also known as a retained earning account. So whether the bank makes a profit or makes a loss, this is the GL that houses such balance. We have the general loan loss provision account. What this account does is that the bank is expected to make provisions for risk assets. Risk assets are loans given out to customers, overdrafts allowed to customers. That is, overdraft is when a customer is allowed to overdraw his or her current balance. Once a customer is owing the bank, whether through a loan or through an overdraft, the bank is expected under regulation to make a provision for such customer. And whenever these provisions are made, customers are categorized in two major classifications. We have the performing customers and the non-performing customers. The performing customers are the customers who are servicing their loans or overdraft as at when due, that is, they are not owing the bank any outstanding amount. Then the non-performing customers are those who have defaulted in repaying their debt, whether in full or partially. So when a provision is made, the regulation expects the bank to make a 1% provision for all its loans that are performing. So once that is done, the system will automatically post the 1% into this account called General Loan and Lease Loss Provision account. Likewise, for the non-performing customers, the system will also post their own provision amounts into an account called Specific Loan and Lease Loss Provision account. Next is interest in suspense. Interest in suspense is a type of configuration that automatically moves an income that has not been realized by the bank into a suspended state. Being suspended means the bank has not yet realized that interest, and as such it will be a wrong estimation for the bank to report an income that has not yet been realized. So automatically, once the system detects that the customer fails in repaying his loan, his interest back, the system will automatically move that interest amount into a suspended state, and this will be moved into the interest in suspense account. We also have an account operation called interest overdue. Interest overdue is also another type of operation that moves an unpaid interest into this account called interest overdue account, meaning the bank still has some unrealized interest either on loan or on overdraft yet to be collected. So once the system detects that a customer is owing an interest, these accounts will be debited. Remember, this is also without human intervention. We have interest payable account. Interest payable account is an account that houses interest that is expected to be paid to a customer who has funds in the bank. When you have money in your savings or your current account, depending on the bank, it is expected that such amount, such balance, yield interest. So on a daily basis, the system, through its pre-configurations, will post daily interest into an account called interest payable account. What this account means is that it reminds the bank that these are interest that will be made payable to customers either at the end of the month or at the pre-configured time. We also have an account called interest receivable account. Interest receivable account is the account that also houses interest that are expected to be collected from customers. We have a loss on asset disposal account. If there's an operation that is configured to perform this function, what it does is anytime an asset is disposed, the system will automatically compare the value on disposal with the accumulated depreciation of the asset in order to determine whether the assets being disposed is at a profit or at a loss. So if it is at a loss, then such loss is posted into an account called loss on disposal account. Then if it is a gain, such gain is posted into an account called gains on asset disposal account. We also have another type of operation called principal overdue account operations. What this account does is, for every principal that a customer defaults in repaying, such principal amount is automatically posted into this account called principal overdue account, meaning due and unpaid principal. We also have taxation expense account. The bank is expected to pay tax on their profit. So when it is time to pay tax, the system will automatically put the tax amount into an account called tax expense account. Remember, this account would have been pre-configured from inception, so no human intervention is involved. We also have an account called VAT account. VAT account operation houses VAT charge on some customers. For example, if a customer requests for an ATM card, there's a VAT on that service. So there are some services that the bank charges the customers, and those services also accrue VAT. So whenever a VAT is charged on any service rendered to a customer, the VAT component of that charge automatically routes into the GL configured to act as a VAT account. Also, withholding tax accounting operation. Any GL that has been configured to operate as a withholding tax account will always house withholding taxes charged on customers' interest. That is, when an interest becomes payable and is paid into a customer's account, whether it is a interest on savings or interest on fixed deposit, such interest are taxable, and the tax charged on those type of interest are called withholding tax. So once a withholding tax is charged on a customer's interest amount, the system will automatically post such tax into an account called withholding tax account. All these automations helps the bank to reduce human workload and also to reduce human error. Thank you very much.